All right, let's talk about something that sounds almost too good to be true, making money while you sleep. No, seriously. We're diving into dividend investing, and I'm going to show you how it all works, even if you're starting with, well, nothing. So let's get right into the big idea that makes this whole thing tick.
Just let that sink in for a second. Imagine waking up, checking your phone, and seeing money in your account that you didn't have to work for. That's not a fantasy. It's what happens when you stop trading your time for dollars and start letting your money work for you. It's a total game changer, and that's exactly what we're digging into today.
Okay, so first up, what in the world are dividend stocks? Let's break it down. Super simple.
A dividend is basically just a thank you payment. It's the company literally sharing its profits with you, its part owner. Think of it like getting your slice of the pie just for being an investor on the team. Pretty cool, right?
So picture this. A company makes a big profit. Now they've got a choice to make. They can either plow that money back into the business, build a new factory, invent the next big thing, or they can share the wealth with the people who own the company. And guess what? That's you. When they choose to share, that's where dividends come from.
And this is so important to get. You're not just buying some random letters on a screen. You are literally buying a tiny piece of that company. You become a part owner, and that ownership gives you a legal right to a piece of the profits. All right, so you own a piece of the company. Great. But how do you actually get paid? Well, there are count 'em, two ways you make money here. So here are your two money makers. First, you've got the dividend itself. That's cold, hard cash landing in your account, usually every quarter. The second way is what we call capital appreciation. That's just a fancy way of saying the stock itself becomes more valuable over time as the company does well. And that's why this is so awesome. You're getting paid just to wait. While you're holding the stock and letting it grow in value over the long haul, the company is sending you cash payments. I mean, come on, it's the best of both worlds. Okay, we've covered the what, so now let's get to the how. You can't just pick any stock. We need a strategy, and it's all about finding what I call a safe yield. Now, it's really tempting to just look for the company with the biggest, juiciest dividend. But trust me, that's often a trap. A super high yield can actually be a huge red flag that the company's in trouble. The real goal here isn't the highest yield, it's the safest one. So, how do we find these safe bets? I've got a simple 3-step checklist for you. Let's walk through each one. Step 1, look for the Dividend Aristocrats. These companies are the absolute legends of the investing world. We're talking about businesses that have given their shareholders a raise by increasing their dividend every single year for at least 25 years straight. That's just wow. It tells you they are incredibly stable and well run. All right, step 2 is checking something